There is an ocean of money flowing right beneath our feet. It is vast, dark, and deep. It doesn't appear on the balance sheets of the Federal Reserve. It isn't guaranteed by any government on earth. And most terrifying of all, nobody actually knows exactly how deep it is. Most of us live our lives believing in a simple economic reality. We think that when the Federal Reserve prints money, inflation goes up. When they raise rates, the economy slows down. We assume that Washington is the captain of the global economic ship. But that is a dangerous illusion. The truth is, there is a ghost system operating in parallel to the one you see on the news. It is a shadow banking network where $13 trillion, perhaps more, are created, traded, and leveraged outside the borders of the United States and completely outside the reach of U.S. law. This is the mechanism that actually decides the price of the gas in your car, the interest rate on your mortgage, and whether the global economy survives tomorrow or collapses. It is called the Eurodollar system, and right now, that ocean is beginning to dry up. Before we panic, we need to understand what we are looking at, because the name itself is a lie. When you hear Eurodollar, you probably think of the euro currency used in Paris or Berlin. Forget that. It has nothing to do with the euro. A Eurodollar is simply a US dollar held in a bank outside the United States. That geographical distinction changes everything. If you deposit a dollar in a bank in New York, that bank has to follow strict rules. They need reserves. They have the Federal Reserve watching over their shoulder. But if that same dollar is deposited in London or Singapore or the Cayman Islands, the rules vanish. There is no Federal Reserve mandate. There are no reserve requirements. It is the Wild West of finance. This shadow market is the true circulatory system of the global economy. When a factory in Vietnam buys machinery from Germany, they don't pay in dong or marks. They pay in US dollars that likely never touch American soil. That is the Eurodollar. It is the dark matter of the financial universe. We can't see it directly, but its gravity controls everything around it. But how did a system this massive and unregulated even begin? It didn't start with a greedy banker on Wall Street. It started with a fear of war. Rewind to the 1950s. The Cold War is freezing over. The Soviet Union is selling oil and gold to the world, and they are getting paid in US dollars. This created a massive problem for the Kremlin. They needed the dollars to trade, but they were terrified of keeping them in American banks. If a hot war broke out, the US president could freeze their assets with a single phone call. Leaving their money in New York was like handing their gun to the enemy. So, the Soviets looked for a loophole. A Soviet-owned bank in London, the Moscow Narodny Bank, approached British bankers with a quiet, confidential proposal. What if we leave our dollars with you, here in London? You keep them on your books, you lend them out for profit, but keep them away from New York. The British bankers, eager to revive the city of London as a financial hub, agreed. And in that moment, the first Eurodollar was born. It was a US dollar, but it lived in Britain. It had the stability of American currency, but the freedom of British law. It was the perfect financial weapon. Soon, it wasn't just the Soviets. Multinational corporations, dictators, and other governments realized they could bypass US regulations and interest rate caps by moving their dollars offshore. The market exploded. It went from a few $billion to a runaway train that no one could stop. It fueled the globalization of the last 60 years. But in their rush to expand, the architects of this system built a fatal flaw into the foundation. To understand why this system is so dangerous today, you have to understand the three laws of the Eurodollar laws that defy basic economics. First is the concept of phantom leverage. In a normal bank, money creation is limited. In the Eurodollar system, money is often created through complex interbank lending chains that exist only on digital ledgers. Bank A lends to Bank B, who lends to Bank C, who lends back to A on paper. Everyone has money. In reality, it's just a web of promises. Second, and most importantly, collateral is king. In this dark ocean, cash doesn't matter as much as pristine collateral, usually U.S. Treasury bonds. Banks use these bonds to secure loans, but they don't just use them once. Through a process called rehypothecation, a single U.S. Treasury bond might be pledged as collateral for 5 or 6 different loans simultaneously. It's like 5 different people using the same house to take out 5 different mortgages. As long as house prices go up, everyone is rich. But if the price drops, everyone is homeless. And that leads to the third law. There is no sheriff. If a bank in Ohio fails, the Federal Reserve steps in with a bailout. But if a Eurodollar chain breaks in London or Hong Kong, the Fed has no legal authority to bail them out. There is no lender of last resort in the shadows. We have seen what happens when this system has a heart attack. We call it the 2008 financial crisis. The history books tell you 2008 was about subprime mortgages in America. That is only half the story. The real collapse happened because the Eurodollar system froze. European banks, which had borrowed trillions in short-term dollars to buy American assets, suddenly couldn't roll over their loans. Those mortgage-backed securities became worthless. The web of promises snapped. The global economy didn't just stumble. It had a seizure. And now, look at the world in 2024 and 2025. We are seeing the same warning signs, but on a grander scale. The Federal Reserve has aggressively raised interest rates to fight inflation at home. But remember the link. When rates go up, the value of existing bonds goes down. This is the nightmare scenario for the Eurodollar system. The pristine collateral, those U.S. Treasuries that back the entire shadow network, are losing market value. When the collateral loses value, the shadow banks get scared. They stop lending. They call in their loans. The ocean begins to shrink. This creates a terrifying paradox that confuses almost everyone. You look at the U.S. government printing money and think the dollar should be weak. Yet, the U.S. dollar keeps getting stronger against the yen, the euro, and the yuan. Why? Because the world is starving for Eurodollars. There is a global margin call happening. Nations and companies are scrambling to find dollars to pay off their offshore debts, but the supply is vanishing. We are already watching the consequences play out in real time. When the Eurodollar tide goes out, the weakest swimmers drown first. We see it in Sri Lanka, in Lebanon, in the struggling economies of the global south. They run out of dollars to import fuel and medicine. Their currencies collapse, not because their economies are dead, but because the global plumbing has been shut off. This is the precursor to a sudden stop. If this contraction continues, global trade simply halts. Ships don't move because letters of credit can't be funded. Factories close because they can't buy raw materials. It isn't a slow decline, it is a cliff edge. When empires of credit fall, it is never slow. It is sudden, brutal, and final. The Eurodollar system allowed the world to grow faster than ever before, but it was built on a foundation of endless expansion and blind faith. Now, as the liquidity dries up, we are waking up to the reality that $13 trillion of global wealth was just a ghost in the machine. The next time you hear about interest rates or currency fluctuations, remember, that is just the surface noise. The real story is happening in the deep, dark water below. And right now, the tide is going out.